You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Remember, options involve risk and are not suitable for all investors. For more information, please read the characteristics and risks of standardized options available at www.sogotrade.com. Now, let's get you into peak options trading shape. Here are your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli.
All right, everybody. That was nice. That was a little blast from the past. Old school intro. All right. That old-timey music means it is time once again, listeners, for Education Wednesday. And once again, we have a special treat in store for you this week. You know, it's an embarrassment of riches these days here on the old Options Bootcamp feed. Last week, we did our first live with an audience show for Options Bootcamp in years, many years, there at the live mastermind event. And this week, guess what, listeners? It's another epic milestone. It is none other than Options Bootcamp 200. Yes, the 200th episode spectacular is upon us. So great times afoot. We're looking forward to a fun time. Hopefully you are too. It's a fun day too. We thought, what better way to celebrate this milestone than to have you folks join the party. You know, a lot of you like to listen on demand, but if you want to join us live this week, we're throwing open the doors to all comers. Whoever wants to join us here today, win fabulous prizes, perhaps all sorts of fun. Maybe we'll have some giveaways for whoever has the best questions, all sorts of fun stuff. We shall see. We shall see what's going on out there. But of course, join us over there at the usual link, the Mixlr link. It is now open for all and sundry to come join the party one day only. So get in there while the getting is good. And joining me, you know, it wouldn't be Options Bootcamp 200 without my cohort here, the guy who was with me on the very first episode of this show and been on pretty much all of them. I'm not sure, maybe he missed a couple in between, but been on pretty much all of them ever since. The black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. Congratulations, sir, on episode 200. Quite the milestone. Not many shows make it this far, sir.
I know, man. Likewise. Congratulations to you here. I've got some champagne here. Hold on.
Oh, there we go. Nice. All right. So I figured you'd be bringing the drinks. So I figured you'd have us all covered here on the show. So if you got your drink ticket, listeners, just send it over to Dan, and he will happily fill that drink order for you over there. All right. Because, you know, Dan, it's funny. We had the big shindig last week at your live event. I guess if we had planned it well, we would have had them coincide with the episode 200. But c'est la vie. I blame you and your mastermind planning, sir. You didn't line it up with the Options Bootcamp schedule. How dare you, sir?
Oh, I know. That would have been perfect, wouldn't it, man? But hey, you know what? 2 great and special shows in a row is wonderful, too.
People in the chat saying, ooh, love the new intro. That's old, baby. That's the old intro. Do you remember that one, Dan, from the old days with, it was me, you. We'll get to what the first episode was. Back a little more nostalgia for you, too. With a segment we don't even really use on the show anymore. So let's bring that back as well. let's get into an old-fashioned roll call.
Roll call! You boots listen up while today's guest speakers are announced.
Whoa, another blast from the past. Dan, we haven't used that drop in forever.
I know, man.
Remember we used to have guests and do interviews on the show? Oh, man, the show has evolved in so many ways. So that was kind of fun to bring that back. Yes, we are in the midst of our first roll call in many episodes, listeners. Glad you could join the party here. But Dan, of course, we are on episode 200. It means we have to look back a little bit at the primordial ooze days, the origins of this show. I was trying to think the other night how this show actually came together. And I think the genesis of it was you and I got stuck on a panel together. Remember back in it was like a money show in Vegas. And you and I it was you and me, I think some futures indicator guy, I forgot his name. And and we went out for dinner after. I think somehow after that period, that panel is to blame for the origins. You're like, hey, I know you're doing this podcast network. I would like to be on a podcast. And it kind of slowly became what it became. And we launched it. First off, is that your recollection as well, Mr. Dan, or all the drinking, are those days just gone to?
Yeah. I'm there's a lot of drinking, Mark, a lot of drinking.
I do recall from that event. I do believe it was a money show in Vegas in August. And my enduring memory from that, on top of doing the panel with you, is never go to Vegas in August ever again. It is like an oven, that city, that time of year. So there you go. That's your first bit of wisdom for the show, listeners, is never go to Vegas in August. But of course, the show proper, Options Bootcamp Episode 1, launched all the way back on March 26th of 2012, listeners. So yes, we have been doing this for over 10 years now. March of this year was actually our 10-year anniversary. We're closing in on 10 and a half years, Dan. Does that even sound, that number sounds crazy to me. Does that even sound possible?
Just for boot camp?
Just for boot camp. So yeah, if you go back to my history, that goes even farther. By the time we launched boot camp, I had already been doing podcasts for 5 years. So yeah, I get the OG badge for podcasting for Options. But yeah, boot camp was already 5 years into the run, and that's over 10 years now. Isn't that crazy?
Holy cow, man. So you're the reason I have gray hair now.
I am literally the reason. I saw Dan in person last week, listeners. He's just festooned with gray. I have worn him down to a shell of his former self. But way back in March of 26th of 2012, he was a vibrant and vigorous fellow. And it was myself. It was Dan, of course, as my co-host. And then we brought on guests. Dan, do you remember who our guests were for episode 1 of Options Bootcamp?
I literally have no idea. I have no idea.
That's why I love you don't cheat, because the answer is actually right in front of you. I sent it to you earlier. But yes, our guests were actually Michael Ranieri and Tony Leach. Michael was the CEO, and Tony, I think, was their product development guy from Zecco. And you might be saying, what the hell is Zecco? Well, Zecco, listeners, was the broker that was our initial sponsor on this program. We launched this show kind of in partnership with them. So everyone out there right now who's, first off, you probably have never heard of Zecco. They existed for a while, and then they were acquired by Trade King. We may have heard of Trade King. That's, of course, the company that Brian over there, now at Ally, of course, is part of, and he was with for a long time. They acquired Zecco, and then Trade King, of course, was subsequently acquired by Ally. So they are now Ally Invest. So the remnants of Zecco still exist within Ally today. But what made them kind of stand apart from the crowd was they were one of the early players in the no commission game. That was their game way back in the day. And not so much for options. They had a hard time with it for options, but for stocks, there were no commissions. So everyone is all excited about Robinhood saying, hey, look, this zero commissions, what a great innovation. It's been done before. That's why when Robinhood came along, I said, this path is actually well trodden. People have gone down this road before, and the people who did it, they're not around anymore. So maybe read into that what you will. Mike was our guest. Dan, do you recall anything about those guests in those early days of doing the show with Zecco, sir?
Dude, I'm going to tell you something. I'm looking at the notes, and I'm looking up these dudes on LinkedIn, and I still don't remember them. The one guy apparently is a product director at Facebook, which means he's the guy who's stealing all your information and selling it to political organizations. But I don't remember these people, their names, their faces, anything about them.
So the early days of the show are lost to Dan's memories. Well, I know a lot of you remember this first episode because, as we talked about last year, the first episode 1 of Options Bootcamp, was so popular. It was actually our number 1 episode of any show we did on the network last year. That's how many of you were coming in and going back to episode 1 of Options Bootcamp to start at the beginning, which, as we all know, is a very good place to start. So yes, that episode 1, Dan, we talked about, you and I made the case for trading options, shattering myths and resetting expectations. That's good to know. Talked about the evolution of options, eliminating barriers to entry, increasing the flow of information, commissions. We talked about, obviously, basic definitions, what's an option, what's a put, what's a call, the impact of time frame on options, leverage, safety, risk management, how they can be income generating, long call and long put examples. Damn, we packed a lot of living. That was just in the basic training segment. My goodness. We brought the thunder that episode, sir.
Jeez Louise, was this one of those 3-hour Joe Rogan podcasts?
I guess we went
about everything.
We went deep, and we weren't done though. Then we had our inaugural roll call segment. We brought on Tony and Michael from Zecco, and they talked about their desire for more options education, which is why they were sponsoring the show, and also talking about their new platform, how they were building education into it, all that good stuff. We have since gone back, listeners, because so many of you are listening to episode 1 right now, A, and B, because Zecco no longer exists. We have remastered that first episode. We kind of excised that roll call segment because it doesn't really make sense to talk about a platform that doesn't exist any longer. And so we have kind of redubbed it, remastered it, made it sound a little bit more fun. We made Dan sound a little bit more manly, a little bit more timber in his voice. And so you can go find that episode 1 remastered now on our feed, listeners. And maybe we'll get to remastering some of the other episodes as well. But episode 1, I know, was a popular one for you folks out there. So, Dan, episode 1 apparently lost to the primordial ooze of your memory, sir.
Yeah, man, that was a long darn time ago. But we've come a long way together, haven't we?
We have, sir. The network has grown. Many more shows, many more listeners, many more people. We do it live now, obviously. Of course, we have the pro stuff for all of our live people out there. So, yeah, a lot of fun things have come on in the decade plus now that we've been options boot camping. Hard to believe, Dan. So when I say we're kind of OGs on the options educational podcast, that is certainly the case. So interesting stuff. And Dan, we launched the show, like I said, in March 26th of 2012, to be precise. We got our first 5-star review on iTunes. Remember, it was only iTunes back then. There really weren't other podcast places to go back in 2012. I think Google Podcasts was distant thought in the future. Spotify didn't exist. It was pretty much just iTunes. We got our first ever 5-star review, Dan, about 6 weeks later or so, mid-May, from Andre K7. He said, "Great program. Thank you. 5 stars." So there you go. Man, a few words. So Andre K7, thanks for being the first of many 5-star reviews to come. If you're still listening, Andre, hit us up. Maybe we'll throw some prizes. In fact, let's just start throwing some prizes out. So Andre, if you're listening, because you were the first ever 5-star review, hit us up, reach out to our producers, reach out to us here on the show. Just reach out to questions@theoptionsinsider.com. Say, I'm this guy. Give us some proof. We'll give you some free access to the pro for being one of our early, first ever, really, 5-star review out there. Getting the ball rolling. Dan, I'm sure you remember that awesome 5-star review from Andre K7. You were just talking to me about it a couple of weeks ago.
Oh, you know what, vividly, when people say nice things about us, Mark, I always remember them.
Yes, you're always good for a compliment or two. If you guys listening live, if you have questions, we obviously have questions people have sent in as well for the Bootcamp 200 extravaganza. Maybe we'll put it up to a vote here, too. We get some good questions. Maybe they'll win some fun access to the pro. And if you're an existing member, we'll just extend you there as well. So fun prizes for all and sundry for the episode 200, Dan. Sound like a plan?
That sounds fun and fabulous prizes, because they're fabulous, too. They're not just fun. They're fun and fabulous.
Fun and fabulous. And if Dan wants to throw wads of cash at you as well, who am I to stop him? So hit him up, Dan@markettaker.com for your large cash prizes after the show. All right. Dan, we had a busy year that year, Dan, because right after episode 1, which aired on March 26th, we came back a few weeks later, April 11th, with episode 2. We talked about, guess what episode 2 was about, Dan? I'll give you a hint. It's your favorite options thing. You may have written a book or two about these.
is it about why I'm so much better looking than you, Mark? Was that episode, or was that a different?
We're not delving into the options fiction yet. We're still staying in the nonfiction for now. We'll get into the fictional realm a little bit later. No, it's of course the Greeks, sir. We did an episode all about the Greeks on April 11th. So that one, I don't know if you were very well prepared for that episode.
Oh yeah. I had to really dig deep. I had my, my resource guide open.
Yes. You had your own tome open and available for you. And then after that, episode 3, we packed a lot of living into this year. Episode 3, we were talking about buying options. So the flip side of that was episode 4 with selling options. Episode 5 was spread trading. Episode 6, we got into complex spreads. Episode 7, we went back to basics. So we already, after episode 7, already going back to the basics. Episode 8, a little bit more, I think probably based on your feedback, we went back to the Greeks. It's all Greek to me, episode 8. Number 9, we were busting some common options myths. Number 10, we were talking about your frequent options trading mistakes. 11, you guys liked it, so we came back to busting more options myths and taking names. So we were doubling down there. Episode 12, we got into the weeklies. They were starting to get hot around that time, so that was good timing. And then we ended the year. All this was just from March till the end of the year. We ended that year in December with Spreads Part 1. So we got into more even in-depth about spreads there, Dan. So, Dan, quite a lot of living we packed into that first year of 2012, sir. Interesting stuff.
Yeah, so we had those episodes. So we must have done them about once every few weeks then, huh? We weren't so regular back then where we, just make sure that we're on time for our flock here. We just did them willy-nilly, I guess, huh?
Yeah, we were pretty regular there. The only time we kind of dialed it back was, as one of our listeners mentioned, we had that hiatus for a little bit in the middle of that run. It was only for a few months, but listeners clearly noticed they wanted it back. And so we were hitting you hot and heavy there that first year, obviously got into 2013 and beyond. And the show, as you know it and love it, grew into shape. We added other sponsors. After Zecco, there was Sogo Trade, and NASDAQ's been on it before. And all kinds of firms have been on Boot Camp over the years. Sogo Trade, another one that doesn't really exist, at least in that capacity, I don't think, anymore. And they started focusing more on the Chinese market as well. They had a guy named John Critchley, who was on a lot of those early episodes. He was their educator. He was a good guy. And so there was intriguing stuff to talk about there. Some other nuggets, Dan. Let's just set the stage for what was going on in the world, what was going on in the markets when we launched this show way back in the dark primordial ooze days of 2012, which, judging by the numbers we see for this show, vast majority of listeners of this show, we're nowhere near trading options back in 2012. They were alive, but some of them just barely. All right, so back in 2012, March of 2012, listeners, the S was at about 1,400. So compare that to where it is right now at about 40. It was around 4,300. I don't look where it is today. Actually, we're below that now, around 42, 41 something. So yes, a pale shadow of what it is right now. That means SPY was at around 140 at the time, listeners, if you're more of a SPY person. The Qs were at a whopping $67 when we launched the show. Some of these are going to hurt, listeners. Dan, take a guess. Where do you think Apple was when we launched the show?
Oh, geez. Well, that was pre-split. I mean, if we keep it split adjusted, oh, man, I don't know. It had to be...
all split adjusted, yes.
Yeah. So, let's see here. Apple right now is... where is it on my little watch list of fun here? It's 167, and I bet it was about $50 split adjusted.
$21 is where it was back then. So yes, split adjusted $21 for Apple, listeners. I told you some of these going to be a little painful, so just buckle in there, listeners. How about this one, Dan? Where do you think Bitcoin was back in March of 2012?
A twinkle in Satoshi's
yes,
eye,
it was just a glisten in Satoshi's eye. It existed. I will say that. And it was not the 1,000 plus level that we saw later on. I will give you those hints. It was somewhere between 0 and 1,000.
I bet a lot closer to 0, too.
Yes, much closer.
You know, man, I remember at one of those events, because Mark and I did a few of these in-person events where we were on panels and that kind of thing, at least a handful back in that era. And I don't remember if that was the first, one that sort of launched this whole podcast thing for us, or if it was a different one. But I met a dude there, I forget his name now, who used to come to some of our meetings, and we went out to lunch at Ceres in the Board of Trade building. And he's like, "Oh yeah, there's this thing called Bitcoin, and you should totally buy it." And I'm like, "Yeah, really?" So it's like fake money that's some individual just dreamed up? Like, how much is it? And he's like, "Oh, you can buy one coin for $500. I'm like, "That sounds ridiculous. Why would I ever want
No,
to
it
do
sounds
that?"
like a ridiculous amount of money. You had to wire it to like Mount Gox back then. You had to go to like Western Union. It was all sorts of shady, right? Just oozed shadiness.
Yeah, and actually, I probably did make a good decision because Mount Gox, all the money in Mount Gox ended up disappearing.
Yeah, a lot of that vanished. So I mean, obviously, you could have mined it as well. That's another way you could have gotten Bitcoin back then. A lot of people did. But if you wanted to buy it the old-fashioned way, yeah, you had to go wire money to Mount Gox or something like that. And Mount Gox did go belly up. So there is a chance you could have missed out. Our chat is guessing, looks like $39 they're saying for Bitcoin in March of 2012. Not quite. How about almost $5? It was a little bit shy of $5. It was like $4.85, somewhere in that range.
Oh,
so all the Bitcoin you could have wanted, listeners, all you had to do was go down to your local Western Union and wire it to Mount, or build a rig and mine it yourself. And there you go, $5. And if you had mined it, you could have sold it for a whopping $5. So that definitely diminished the incentive somewhat out there. So there you go, Liz. I told you some of these might be painful out there. Let's get to other nuggets. Obviously, the S&P, that was a good year for the S&P. Stocks were up 13% in 2012 at the end of the year. So everyone's talking about the big rallies right now, but 2012 was no slouch. Not quite a 2020 or a 2021, but it was a decent year. It was the best gain we had seen in the market for 3 years up until that point. So the few years previous to that were a little light. Other facts, other nuggets from the world of options, drilling down a little bit to our neck of the woods for 2012. 2012, we talk about record years where everyone's talking right now. Can we possibly eclipse the record year that was last year? Nearly 10 billion contracts on the tape, listeners. Dan, you want to take a flying guess what the total volume for the year in 2012 was, sir?
Oh, goodness gracious. I couldn't even tell you. I don't even know. What was it? I give up.
It was less than half. It was just barely managed to beat 4 billion contracts that year. 4.04 billion contracts to be precise. And that was actually down. We talk about all these years, everything's up. Overall, global options and derivatives volume was down about 15% in 2012 from the year before, because 2011 was a record year. 2011 was the biggest year we had ever seen. 4.6 billion contracts, Dan. That was getting close to half of what we're seeing now these days. That 2011 record, that stood for a little while, because 2012 was 4.04 billion contracts. And then 2013, we had an increase again. Numbers were up. And it was the third consecutive year of over 4 billion contracts. But it was only about 4.17 billion. So it took a while to even eclipse that level we saw back in 2011, let alone get to what we saw in 2020, which was a little bit north of around 7.5 billion. And then, of course, 2021, which was 10 billion. You can see now how just the massive leap that the options world has made just in the last couple of years. I mean, we talk about 4.6 billion in the options world kind of losing their minds. My God, that's so much volume. How will we ever hit that again? And we didn't for a couple of years after that. We were still below that level for several years. So this, repeated records, repeated explosions of volume, seeing more and more paper hitting the tape every year. If you go back a little bit, you can see why I was a little bit skeptical, why we wouldn't maybe hit those numbers again, because if past is prologue, we traditionally did not. So intriguing stuff back in 2012. And again, 2011 was a banger year. Again, if you weren't playing in options back then, it was a crazy year. And then we took a while to get back to those levels again. And then we were still not that far away from that level in 2019. And then, of course, 2020 happened and all bets were off. And then we hit that 7.5 billion level. And it pretty much was off to the races from there. So we were still hanging out. Not that far away from this 4.5 billion contract level, nearly a decade later. And then it took the pandemic to really kick things into high gear again, to bring a lot of you, the listeners to this program specifically, into the world of options to wake you up to say, hey, these options things are kind of crazy, kind of cool. I should learn more about them. And we've seen the volume tsunami that has resulted out there going forward. Some other nuggets. The VIX call to put back then was around 1.5. People were freaking out about that. They thought that was crazy low. And of course, in hindsight, now what we've seen in the pandemic is that a lot of people were piling into puts. We've seen much lower numbers since then. So yeah, people freaking out about 1.5. That shows you kind of the origins of VIX, right? Listeners, VIX was a call denominated product. That's where the interest, that's where the action was. Nobody played in the puts. So when the call to put got below 1.5, people were freaking out. There were articles all over Bloomberg about how low it was. And there we go. Fast forward a decade and things have changed quite a bit. We don't get freaked out about that anymore. Speaking of freaking out, people were freaking out about TVIX around the time we launched our show as well. That's when it had its first, call it what you will, melt up, melt down, freak out. That started in February of 2012, went through the launch date of our show into March. I won't get into the nuances of why it melted down, listeners. You can look that up for yourselves, TVIX meltdown. But effectively, this was an exchange-traded note. It was the levered. It was the 2X VIX product. Those were kind of rare back then. This is one of the big ones. And we saw crazy fluctuations with the notes that was being issued by Credit Suisse. They stopped issuing for a while, kind of like we're seeing now with Barclays and VXX. And so the note went crazy and all sorts of madness ensued. And we even saw the bats screwing up their first IPO right on the time we launched our show, March of 2012. They tried to go public and screwed up all the tech, and they had to cancel their IPO. They had to bring it back, which I've never seen before. Of course, bats now part of the SIBO empire. So, Dan, a lot was going on in the heady world of 2012 from an options and vol perspective when we launched the show. Anything else stand out to you, sir?
Oh my gosh, you know what? That was quite a year. I like, you're like bringing me down memory lane over here. That TVIX thing, holy moly, what a poop-tastrophe that was. And I remember that BATS IPO. That was like, oh man, really? Like the exchange that's like the technological leader.
Yes. IPO. They sold themselves on how great and tech forward they were. I remember running into some of their guys at the options conference that year, and they just had their heads in their hands the entire time. It could not have been a worse slap in the face for this technologically driven exchange to have they ran their own IPO and they botched the entire thing. It was a disaster, which led down the road to them being acquired by SIBO and now being part of the SIBO empire, where we just recorded our Mastermind live show last week, Dan. So it all comes full circle to that. I know the listeners want to get at us. So if you guys have questions, start hitting us up. People have already sent some in, obviously, as well. But Dan, before we got out of the roll call, our favorite segment we do all the time, I know you wanted to think back a little bit, not just to the data points I was talking about, but you wanted to talk about if you knew then what you knew now, some of the lessons you maybe would apply to your trading or just to your options world in general, sir. What do you have for us?
Oh my gosh. Yeah. Well, we were joking over email. You're like, well, yeah, the obvious one is buy Bitcoin.
Buy Bitcoin and maybe Apple and you're good. See you in a decade.
Yeah. And there is a whole bunch of truth to that. That's for sure. But man, like if I knew then what I know now, there'd be a lot of things. First of all, it's been so interesting to see like all the new entrants over the past couple of years really starting. Well, I don't know. I was going to say starting with the pandemic, but it actually kind of started going on a little bit before then with the Wall Street Bets group on Reddit, who've been around for a while. And, like a lot of people who are not 23 years old, I didn't know about that group, and I. You're
not 23? I just saw you last week. You don't look a day over 74, sir.
Yeah, exactly. But I sort of do wish I knew about that. But then between that group and other groups like that, and then the pandemic hitting, and just the explosion in interest in options. Because of some of those catalysts, it was interesting. Somebody says if you knew then, what do you know now? Like, it's easy to say, oh, I wish I had tomorrow's newspaper today, and all that, really tangible. Like, I'd be rich if I knew this. But just some of this information about how the options industry changed, it's been so fascinating. I mean, it's been fascinating really from the beginning, but especially with our timeline. I mean, starting maybe a decade before then in 2001 with the multiple listing, but it just continuously rolled out and evolved since then. Just last week, I was down on the brand new CBOE trading floor, which they just built in June, like 2 months ago. I would have never thought that CBOE was going to build a brand new trading floor. I would have thought it would all just go away, but they do. I want to say they said it was either 40 or 60% of their volume in SPX happens on the trading floor. Average contract size is 300. I don't know. I guess the big takeaway for me is the same thing that I try and impart on our listeners. Like, as soon as you stop learning, it's over. There's always more to learn. I've been doing this for 29 years. Mark, you're about the same time horizon as me, and I'm always learning new things. And like I've said many a time on this show over the past 200 episodes, the more you learn, the more you earn when it comes to options trading.
Speak for yourself. I started learning about options just a few years ago. I'm a post-pandemic options baby. I've joined the rest of you folks. What are these options things? These are cool. I want to learn more. Speaking of you cool folks, it wouldn't be an episode 200 spectacular without you folks. Let's get to some of you folks now. A little bit of the old 200 spectacular edition of the Mail Call.
Mail Call. Time to look at questions submitted by our listeners.
It's always 4th of July or Flag Day here on the old Options Boot Camp. Let's get to the mail call first, listeners. It wouldn't be an official mail call if we didn't kick it off the way we did back in the early days of the show, and we still do every now and then when he remembers to. Let's kick it off with Dan's question of the week. Dan, you were just masterminding last week. I know I was there. I met some of your mastermind crew, a good crew they were there. I'm sure you got some good questions from them. Or what else? I know you've been saving up some goodies. It's episode 200. What is the question you want to put and answer for our listeners out there, sir?
Well, I was talking with one of our student traders, and I was telling him that this is our 200th episode, want to make sure that everybody listens in. And he said, wow, 200 episodes. I've actually listened to a lot of them. And we were just chatting, and he asked, what was your favorite episode? And I just thought that would be fun to talk about, a little quick trip down memory lane. And there were a few that come to mind. I mean, I will tell you that for sure, one of my most favorite episodes was literally our last one, because we did it live in person at our Chicago Mastermind in the Chicago Board Options Exchange. That was super fun. We got to sort of get live questions from our student traders who were sitting right next to us. That was a gosh darn blast. If you didn't catch that show, go back and listen to it. And then I think of one that we did on behavioral economics. That was really fun. I loved that one. Go ahead and scroll through some of the archives and catch that. And then I know we've done a number of ones on credit spreads, and I can't remember which particular one, but like some of the credit spread stuff that we talked about was really, really great, because credit spreads are one of the most powerful trades you can make. High probability. You can put a lot of extra things on your side, and just, that's the stuff that I love to share on this show, is not just, hey, here's what a call is, hey, here's what a spread is. But, hopefully to make you deeply better, to share some of these like real tips to give you a real edge. Because I think that's what both Mark and I want out of this show for all our listeners is for you to be some of the best traders out there. That's I know for sure that's what keeps me coming back. So Maybe Mark too. I got a feeling that his answer is probably yes as well. But
yeah, we want you here for a good time and a long time. We want you here for both. So we wouldn't want you coming in and just blowing out on the meme wave and saying see you later options. We want you to learn and be able to trade these things over the long term profitably and effectively. That's a good question, Dan. My favorites. I was scrolling through the archives. They are legion as you were talking, Dan. By the way, if you want to do that for yourselves, listeners, of course, you can get it on our website, the full archives of every show we've ever done. Our app is also a great way to get every episode of Options Bootcamp. So if you're on a platform that maybe only limits you to the most recent 25 or 50, obviously we have 200. So if you want to get all of them and you can't get them on whatever platform you normally listen to podcasts on, then of course our app or our website, the places to go. Obviously you guys aren't having trouble finding episode 1 because it was gangbusters. A couple that spring to mind. Obviously it's kind of easy and cheap to say last week's, but last week's was kind of fun and special because we haven't done this show in front of a live audience in years, Dan. So that was just fun. That was just fun to do that again. It kind of gets the old juices flowing again. So I kind of view that as very much the sister episode. That was episode 200 extravaganza part 1. So view these kind of being sister programs, but that's too easy to say that one. So I will say a couple. Obviously the first episode was a big one. That was an important one. But you can't really choose that either. I'm going to say a couple. Episode 59, going to the dark side with Second Order Greeks. That episode from January 14th of 2016. That episode freaked a lot of people out. People still get messages and questions about Second Order Greeks as a result. So that one kind of stands out as being kind of a fun one. But I have to say, Dan, if I have to pick one that kind of stands out to me as well, it was the episode from January 11th of 2019. It was episode 75, and it was entitled Bringing Education Back with a Vengeance. Why does that one stand out to me? Well, that's because that's when we came back from our hiatus. Boot camp was on kind of an extended hiatus. The last episode we had done, episode 74, was from May 30th of 2018. So we had been off for a little over 6 months at that point, and people were hitting us up. They wanted their boot camp back. We knew it was popular. We knew you liked it. We didn't know really how much boot camp meant to a lot of you out there until we started hearing from you. And we thought, you know what? Let's just bring it back. Let's bring it back. And so we brought it back, episode 75. We brought it back with a vengeance. And we've been cranking steadily ever since for you folks out there. You guys have been getting pretty much an episode a week on a regular basis ever since then. So it's been a lot of your love that drove the show back. And we thank all of you folks for it out there. Let's get some of their other love here. Let's go quickly out to the live. We got people saying hello, like Rumen. Well, hello, Rumen. We've got Age, good old Age Del Aquarius. He says, I'd love to see you guys return to the early Vol Views episodes as well. Cut out the market update stuff and leave the good stuff with Don and other. Yeah, people have asked that before. I mentioned we kind of remastered episode 1 of Options Bootcamp. There's a reason we haven't done that for other shows and for all of Options Bootcamp. It's a substantial effort and undertaking to go back and do that. Remember, when you're editing audio, it's kind of like one-to-one editing, right? If it's an hour show, you kind of have to listen to it for an hour and people have to cut out the segments and stuff. I mean, you could try to speed that up a little bit, but it's the laborious process. And so we already are cranking out a couple of shows a day, usually, if not more, to have my team now then go back and remaster hundreds of hours of Options Bootcamp. And then on top of that, hundreds of hours of Vol Views. I have not wanted to take that plunge and burden them with that. But I agree, it would be kind of cool to do that. What format that will take, I don't know. Whether that will be in the same Volatility Views feed, or maybe that should be a separate feed, like Volatility Views Remastered. Maybe we need to do a separate Options Bootcamp remaster. Maybe we just need a shows remastered, one feed with all of them. I don't know. I'd be curious what your guys' feedback. How would you like us to approach that? Would you like us to remaster the Options Bootcamp, or in this case, Vol Views, and put them in the same show feeds again? Or would you rather have them maybe be separate and you can go out and find Options Bootcamp Remastered and subscribe to that individually as well? I'd be curious what you think. Or maybe just one big Options Insider Radio Network. We call it Best Of, we call it Remastered, whatever it is, and we just put all those episodes in that feed and you guys can go down the dark rabbit hole at your own convenience. I'd be curious what you folks think of that. How would you want us to do that? Hit us up. Let us know. We got P&L Man in there. He says, congrats on your 200th episode of Options Bootcamp. It's always fun and informative. Well, thank you, P&L Man. You always ask good questions when we're doing our Q&As and everything else like that. So thank you for all that fun. Mr. Unlimited, congrats on 200 episodes. And here's the 200 more. Yeah. Well, I think you just scared the hell out of Dan. Dan, you got 200 more boot camps in you?
Man, I'm like the Energizer bunny doing this stuff, man. I could do this all day long. I love it.
All right, he has a question for us, too. He says, what do you think will change in the options education industry by the time you go or you get to episode 400? Huh. Well, the options education industry, as you put it, that's an interesting term because that industry has kind of, I think, seen better days, I think, to put it mildly. Let's start off with the top level stuff. I mean, there used to be, back when we launched this show, there was an embarrassment of education options out there. Every exchange pretty much had their own education arm. When we launched this show is when that started to whittle down a bit. There was ISE, they had Alex Jacobson out there doing education. SIBO obviously had the Options Institute. That still exists. Other exchanges, everyone had an education person, an education staff that was out there on top of what the OIC was out there doing for the industry. All of that is gone now. All that's left is the Options Institute. And they're, I think, fair to say, a shell of the former selves as well. There's only a handful. Russell used to be there. Other people, none of them are there anymore. So it's kind of been destaffed, defunded, and the rest of them are all gone. The Options Industry Council tries to do it, but they have had staffing problems of late. Most people who are there are not there anymore. So the notion that a handful of people at OIC can do a lot of the education for the entire industry, it's ridiculous. So we love to see more exchanges, people who have skin in this game, try to dive in. The brokers have tried to step up. There have been efforts out there that have been decent. Tasty built a lot of stuff around educational content. We love to see that. One of the reasons we partnered with Trade King early on the Options Playbook radio show is because they saw a value in community and they saw a value in education. And there were not many brokers doing that back then. So that was kind of interesting and informative for us. I still would like to see more big stakeholders in the space really devote more resources to making education freely available. We've seen some exchanges pop up on this show every now and then. It's kind of like a fleeting thing. They see education and they're kind of like, oh, squirrel, they got to go off to the next thing. They need to have a commitment to look how many people are out there that are learning about options, are listening to a show like this more than ever before, more than every month than there was the month before. And yet, for whatever reason, the exchanges don't really want to engage with this audience. It's the weirdest thing I've ever seen out there. So that to me is strange. Luckily, we got guys like Dan out there picking up the slack. Dan, this is your industry. Mr. Unlimited wants to know, how do you think the options education industry will change by the time we get to episode 400, sir?
Well, yeah, it's been weird. I feel like especially the brokers, because the exchanges sort of now live in a weird world, which I guess if Gary Gensler has his way, may change. And it's just different. But with the brokerage world, options brokers are missing the biggest marketing opportunity that anybody could possibly imagine. Like, I'm sure they hire like these really fancy, expensive advertising firms and stuff to do these commercials that, nobody really cares about. You can't really measure results. But education is the absolute best marketing an options brokerage firm can possibly do, whether it's offensive or defensive, whether it's offensive to go out there and convert people who just trade stocks to all the useful things you can do with options, protect yourself more, get more leverage, trade different things you don't otherwise have access to, or defensive to prevent their current options customers from blowing up their accounts and doing something silly. It is, I don't know. I've talked with many brokerage firms and like literally tried to explain it to them. Look, you're missing the opportunity of a lifetime here. It barely costs you anything. Hire somebody to do some webinars for you, and they're like, yeah, that's a good idea. And nothing ever happens. So I don't know. I mean, I guess keep paying gazillions of dollars for commercials, like, or whatever it is you're doing now. But it's the easiest and cheapest way to market it. There's the big secret.
Question here from Options Queen. How have you seen the options industry change since you started this show? And how do you see it looking when you hit 400 episodes? That's kind of like, we just kind of touched on that, Options Queen. That's kind of what Mr. Unlimited at. And we kind of touched on earlier the levels we talked about for 2012 options volume versus now, and what some of the hot trades and price levels were back then. So maybe if you missed the beginning of the show, you can go check that one out there. We kind of did touch on that already, but it's a good question nonetheless. Let's go to this question here from James Oliver. He says, you got more, Dan?
No, I was just reading James Oliver's question. I've got some great stuff to talk
okay. I thought you said you had more for option screen. All right, let's get to James then. James Oliver. He says, hello. My question is in reference to your recently aired episode from August 3rd of 2022 entitled How to Not F Up Your Credit Spreads. I love when you guys direct us to specific episodes. It's very helpful. It's very informative for helping us answer your question. He says, when you spoke about best practices for constructing credit spreads, you mentioned but didn't go into any detail regarding theta and volatility. You said that having an understanding of this is very, quote, powerful. You stated that you didn't want to speak about it because you had already talked about it in previous episodes. I went through the descriptions of all the episodes in your archives and didn't see any references to credit spreads within this context. Could you perhaps briefly explain why you feel that understanding theta and volatility in credit spreads is so important to constructing credit spreads to get edge, in quotes? And or point me to an article or episode that covers this. Thanks so much for sharing your knowledge, James. Well, that's a great question, James. Very thoughtful, very insightful. And also you reference a very specific episode and you point us right to it. You did all the right things. That's a great question here for our episode 200 spectacular. Dan, this was your baby about how not to F up your credit spread. So I'll let you go first. What do you have to say here for James and his excellent question, sir?
Oh, man, I will tell you, James. First of all, this question actually comes in perfect timing, especially if you're watching this live. But tomorrow night, which is Thursday, October 25th, for those of you, again, watching this live, or if you see this tomorrow, it's today, August 25th. I'm actually doing a special webinar for kind of like some of our inner circle folks, which includes you, on just credit spreads. And I'm covering, I've got this new technology and methodology for trading them. And I've been working on this for like 6 months, and I'm literally unveiling it tomorrow night. So anybody who is listening now or shortly, go to markettaker.com/CS, as in like for credit spread. Market, like stock market, take what's rightfully yours, 2 T's in a row, markettaker.com/CS, and register. It's a complimentary webinar just for you. Log in. I'm going to cover all that great stuff and a whole bunch more.
For the folks who can't make the webinar, are going to hear it after the fact. Give them a quick hit now. What are we talking about here for Mr. James?
Yeah. And we might replay it. So even if you watch this like a couple days later, whatever, try and register for that. But here's what we're going to be talking about. We're going to be talking about, like, first of all, I've got a scanner that finds like credit spreads that professional traders are trading. It's amazing. But then we go and we kind of like check it, do our own work, which I encourage you to do no matter how smart of a person you're listening to. It's your trade. Make sure you like it. And so I list out the steps. I've got some short videos that cover technically what do we look for, which big secret is the 90% of it is support in the case of put credit spreads, resistance in the case of call credit spreads. We do a volatility analysis where we prefer to only sell credit spreads when volatility is inflated, which that we've definitely talked about a number of times, but basically implied over historical, implied in the top half of the 6-month range. No earnings or anything coming out. We don't like doing credit spreads going into earnings or any other big news, like Fed announcements or anything. And, those are really the 3 things that if you're trading credit spreads at all, you need to look at. But even just using the scanner that I developed, you see, like yesterday there was a put spread in Meta that traded. Oh, what was that again? Let me see here. In Meta, it was selling the 155, I think, put credit spread, which is just like such a perfect level. And it lines up with with like exactly the market taker philosophy of how to trade these put credit spreads. Got incredibly solid, wonderful support there. The options, you can get a good premium for them. No news is really pending that's that pertinent. And this just discovers it, and you use that little bit of information right there. It makes it really easy to make the trades.
People have credit spreads on the brain. Since we're just doing this one from James, let's go to this one here as well from Ethan Gwyn, maybe Gwyn. I apologize if I'm not pronouncing that correctly, Ethan. He says, I have a question about credit spreads. I heard it stated that you should get out of credit spreads the day before expiration if the spread is in the money, i.e. you're taking a loss. What if you have a profit heading into expiration? Do you cut bait and take the profit the day before expiration, or do you wait until the day of expiration to close the trade? Love your work, Ethan. So, Dan, it's a credit spread bonanza here on episode 200. In addition, and I have some more info for you, James. We'll get to that in a second. But Ethan here, Dan, he's specifically asking about if you have a profit with a credit spread heading into expiration, do you cut bait and take the profit a day before expiration? I'm not sure why he wants it in that specific of a time frame, but or do you wait until the actual day of expiration? He wants to know. I think I know where you're going with this one, Dan, but what do you have to say for Ethan?
Yeah, Ethan, don't think about it as cutting bait. It is not cutting bait. What it is it's being strategic. If you're sitting on so here's the thing with credit spreads in general. And man, I just had a long conversation with one of our student traders about this over the past few days. So it's not just about your chances of success. It's about your risk reward ratio. In fact, in some ways, it's more about your risk reward ratio. And as you get closer to expiration, and as the credit spreads experience time value and lose value, at some point, the risk reward becomes no longer good. In fact, it can become downright bad. Like say you sold that Meta put spread yesterday. I believe it was a $2.50 wide spread, if I'm not mistaken. Maybe you sold, I forget what the price was. Just say you sold it at 80 cents. As time goes by, it's worth 70 cents and 60 cents and 40 cents and 20 cents. And when you first put it on, you stand to win 80 and lose $1.70. But if the odds are in your favor, that math can still be good. At some point, you get to the point where, hey, there's only a dime left in it. I can wait another 5 days to get another dime. But then if something crazy happens and it turns around, not only do I lose that dime, I lose, everything else that I've already made and everything. I lose it, $1.40. So there comes a point with credit spreads where it's just much more logical to take it off and take 80%, 90% of the profit and not leave this piece of risk on with barely any reward in it. So yeah, I'm a huge fan of taking it off, and it doesn't even have to necessarily be the day before expiration. It could be a few days before expiration. Once you get to the point where you're like, gotta wait to make barely anything, but you stand to lose a ton, get out, man. Good job. Congratulations. You won. You're not cutting bait. You're taking your profits and moving on to the next trade.
Yeah, that's the question I would have for Ethan is why is he waiting until the day before expiration to take these off? There is no shame in getting the heck out of Dodge with a profit there, Ethan. You could do it much earlier. As Dan said, you don't have to wait until the day of or even the day before. These credit spreads, if they're going your way, if you're getting the vast majority of your potential profit, 60, 70, 80, whatever the percent is, maybe 90, if you're getting that close to expiration, it's going to be pretty close. Yeah, you don't really want to wait around to expiration. We always tell people, take their stuff off before expiration. If you're waiting to that very last minute because you're in that credit spread and you want to squeeze out that last nickel or dime that you're waiting for in the decay, that's when things happen that are usually bad. And then all of a sudden that whatever you made, 60, 70, 80 plus percent is now going to a multi-percent loss instead. You don't want to have those swings. So if you don't, pigs get fed, hogs get slaughtered. Applies very much to the world of options. So take your money. You don't have to wait until the last day. If you have a profit target that you've set out ahead of time, and I know you also sent this into Brian's show, and Brian talks about that on that show a lot as well. Set your goal ahead of time, what your profit is that you want to make on this trade, and then take it off when you hit that. And you don't have to wait until this mythical last minute. Going back to James's question here about theta and volatility. Obviously, theta and volatility are very important for the credit spread because that informs you of how long you're going to have to wait and how much you're going to have to wait until your credit spread goes where you want it to do, which is, of course, you want that credit spread to decay, to widen out so you can get your max value for what you sold it on. That takes a while sometimes, which is why people get frustrated trading the spread, which is why it's important to know about theta and just putting it on saying I got X premium and now I have to wait to see when that premium comes to me. You know, you need your theta decay rate, you need your vol levels. That's all very important information that will tell you how that spread will perform and how much of a chance you have of actually collecting a fair amount of that premium, that credit you just sold. Your other question, James, was you said you couldn't find other episodes about credit spreads. Allow me to point you to just a few of them. Episode 13, the one I was just talking about back in 2012, Spreads Part 1. We talked about credit spreads in that episode. Episode 18, The Joys of Synthetics. Also touched on credit spreads there. Episode 28, Pro Tips or Learning from the Mistakes of Others. Also touched on credit spreads there. Episode 40, Trade Adjustments. Got into credit spreads there. Episode 43, for Ethan. You should definitely go listen to that one, Options and Dividends. We talked specifically about when you should close out your credit spreads in that episode. That's why I say, a lot of your questions, we've already touched on them. They're just in the archive somewhere. We talked about closing credit spreads on that very episode. So both of you should go listen to that one, episode 43. Episode 52, we looked back at 2014 and ahead to 2015. We talked about what strategies worked and put credit spreads at the top of the list. Episode 128, we did a deep dive into Delta and, of course, credit spreads versus debit spreads. And then, of course, episode 129, we got debunked more credit spreads versus debit spreads. And episode 131, we got into credit versus debit spreads again. So those are just a few. Obviously, I have more ability to search into the shows than you guys do. So you guys can just really search the titles on a lot of those things. I could see why maybe you were confused. But there you go. Play that back for yourself, and you'll have a good sense of where you can look for some of your credit spread shows. So let's go here to this question. This is more of a comment, actually, from Timur. He says, I had good success with call ladders last year during the meme stock palooza. So I suppose it can be done on equities, but I haven't been able to repeat that performance so far this year. So I suppose you are correct that the use case is limited. And this gets back to our conversation last week, Dan, from our live episode of the Mastermind. Someone had a question about call ladders, and I was kind of dismissive of them. I think you were as well. Timur saying he had decent success during the meme stock. That surprises me, but apparently it worked for him. I would submit there are other strategies that could have worked even better in that environment than a call ladder. But c'est la vie, if it worked for you, I will not argue with you the point. Dan, what do you have to say for Timur here, who's arguing that he had some success with ladders on equities, sir?
Yeah, I mean, look, man, when I used to see a trade that didn't seem to make sense, I'd say, that's a stupid idea. But I don't do that anymore because if something works for you, go ahead and do it. I mean, I've talked to some people who ended up being really, really successful with trades that I look at. I'm like, I don't know how you're making money at that, but if you are, don't stop doing it. So, I mean, hey, I don't know. On the other side of that too, as well as I do, Mark, that there's a lot of people out there who BS you too. So, so hopefully you're not BSing us. Hopefully not, you're BSing yourself. But if it is working for you, if you really figured out all the nuances of these things, the ins and outs and all the little details to make it work, keep doing it, brother. Keep doing it.
And as per your suggestions, we will keep doing this show beyond episode 200, even if that music means this 200th episode extravaganza. I'm having fun. I could keep going with this, but unfortunately I have other things I have to attend to. I know Dan does as well. We'll get out of here on this question. Dan, I'd be curious your input on this one. This comes from our live chat. Unlimited says he wants to win the prize with this question. We'll see if this is prize worthy. He says, now to win the prize, where is the fantasy football education episode? Education. I don't know how we're going to work in the education, but that does bring in a good question. Dan, your fellow educator on Education Wednesday, Mr. Overby, has been hitting me up behind the scenes. He wants to do some sort of fantasy football program on the network. Would you be down for that? What are your thoughts, sir?
Oh, man. I don't think I would win unless there was some sort of element of randomness.
Well, that's even better. You should definitely play.
Yeah, exactly. Right. We just raised the price to $1,000. I bet it'd be fun, but I don't know. I don't know if I'm your guy.
I don't know. So, Mr. Unlimited, I don't know if we're going. I don't know. I'll have to look. I'll have to reach out to some of the other hosts and see if there will be interest. And I know some of the listeners, I think you were one of them, were interested in maybe playing along too. So we shall see. It's coming up to the start of the season, so maybe I'll have to look behind the scenes to see what we're going. I don't know how we could work that into education. Maybe somehow structuring spreads on various teams. There are futures on the teams. Not a lot of options. We could kind of synthetically do our own, I suppose, but that would kind of blow the minds, I think, of a lot of it. And also be a lot of work for the co-hosts I'm bringing on the show every week to not just talk about fantasy football, but also construct their synthetic spreads. But we'll see. I haven't given up on that idea. We'll see how we could do it in a way that is fun and interesting and informative and just fun for everybody. So if you're interested in that idea, listeners, hit us up. Let us know. An auction league, make sure you pay a fair price for the player. Oh, praying. Yeah, we could do that. A lot of the leagues I see, you just kind of do the picking, but we could do a price thing. That could work. Well, Dan, as my co-host for 200 plus episodes now, it's been a fun journey, and we shall continue it into the primordial future. Before we go, Dan, I promised prizes. So which of our question askers do you think should win the free month of the pro over here? Who should get it, Dan? I'll let you choose.
Oh, geez, really, man?
Tell you what, we'll give a couple. We'll give two. How about that? We'll be nice.
Okay. I'm going to go with James Oliver. Let's start with his
him. Question was pretty good. You can't deny James.
I like that. I like that a lot. And let's see the other one. How about? Let's go with Timor here, just for fun.
Timor, okay. No love for Ethan. All right. I was going to be nice and give it to Ethan, too, because he had to. Tell you what, I will give 3. That's how nice we are.
Hey.
Man, I am a nice guy. So all 3 of you, Ethan, Timor, and James, all 3 of you will be contacted by our producers with how to access that. So at the very least, you can now join the live, and then next week, you could heckle Dan to your heart's content. I mean, what's more fun than that, Dan? That's kind of the reason in and of itself to join the pro, is it not?
Yeah, it sure is. You should consider joining pro because there's a lot of little extra things that you get that you don't get otherwise. So, give it a shot.
There you go. Check it out. Of course, if you want to learn what's all about for yourselves, it's more than just the live. Of course, we do exclusive shows like Pro Q&As. Just had a great one again this week with Jim Carroll talking about the ball space. We had Scott Nations, author and ball product creator, in the hot seat last week. Options oddities every Friday. A lot of you folks listening to this show, like yourself, some unusual options activity. We do a whole bunch of it after Vol Views every Friday and a whole bunch more, including giveaways. Coming up on the giveaway for the August Pro Trading Crate. So you want to get in there before the end of August if you want to get access to that giveaway. Those are pretty fun. I'm looking at the mountain of stuff here right now, and there's more in our vault that we have to bring up. So there's a lot of goodies that could head your way. TheOptionInsider.com/pro is the place to go to learn more. Mr. Dan, if folks have questions about episodes 1 through 200, or perhaps they want to check out your webinars or your masterminds or anything else you got cooking in the land of MTM, where should they go? What should they do?
Yeah, give me 1 minute. Make your way on over to markettaker.com. And, of course, if you want to see that webinar tonight, go to markettaker.com/CS.
Markettaker.com. Don't forget the second T there. 2 T's in a row is the place you have to go. We have to get on out of here. Brian will be coming back with his usual live to tape slot. We'll get your question over to him, Ethan. Maybe he'll have some added layers he wants to add on your credit spread question as well, because we're nice folks here. I appreciate all of you joining us here. Of course, all of our Legion of On-Demand listeners, we love you all too. Thanks for a bunch of you for taking the time to write in with questions as well. We love you all. Your questions are really the reason that we do this show at the end of the day, listeners. We appreciate all of you out there. Look for Brian's show On Demand, back again live tomorrow, noon Central, 1 p.m. Eastern with the Option Block. That show's on episode north of 1,000 now, so far outpacing Options Bootcamp in terms of number of episodes. Then TWIFO This Week in Futures Options after that. Friday, Volatility Views at noon Central. And then, of course, after that for all you pro folks on Options Oddities. Then back again next week all the way through to another Wednesday, another episode of Options Bootcamp. Thanks for tuning in for 200 episodes. We'll see you for 200 more. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.